JP Morgan said it, right? Gold is money. Everything else is just credit because they're backed by debt. And Saylor, came so, well, no, Bitcoin is money. Everything else, okay, great. But it's true, right? Everything else is credit. Everything else is debt. Everything else lives in a world where governments can print it. Now, in the old days, you literally had to printing press it and cut the paper and fold them up and hand them out. Now you just push a button.
Yeah.
And you create more ones and zeros. Well, that's just too easy. There's no proof of work, right? Which is, one of the great innovations of Bitcoin.
Hey guys, welcome to Everyday Finance. The October 10th flash crash, which saw Ethereum plummet over 30% from its August highs and Bitcoin drop nearly 10% in a single day. It's left the cryptocurrency market still reeling. Investors are questioning whether this is the last leg of the bull run or just the calm before the storm because, despite the stabilization of prices, confidence is still low. Mark Yusko believes that the entire market cycle may be defined in the upcoming weeks. Mark Yusko forecasts that Bitcoin may reach its high before the end of this quarter, followed by a severe crypto winter in 2026, based on the cryptocurrency's past having trends. He cautions that the eagerly anticipated cryptocurrency season may not materialize at all, or, if it does, it will probably be short and feeble. According to him, the traditional cycle tends to recur. Altcoins momentarily rise before collapsing, after which Ethereum follows Bitcoin's peak. Mark Yusko thinks the top is already in and the bear market has started if Bitcoin doesn't hit new highs by the beginning of December. This might be the last warning before a harsh winter arrives for cryptocurrency investors hoping for one last euphoric bounce.
I mean, look, there's an inevitability about Bitcoin's price in dollars or yen or euros or whatever you want to price it in, rising as countries devalue their fiat currency. And the more they devalue, the higher the price. It's funny. Most of us talk about Bitcoin in dollars. That's our kind of reference point. But like if you looked at Bitcoin in lira, it's been making all-time highs for years because the lira has literally devalued 99.9%. Same thing in Venezuela. So there's this, I call it home market myopia, where one, you think all the smart people are in your home market, which is clearly not true. Two, you think you dominate every market. Like, all the stocks are traded in the United States. Well, that's not actually true. I mean, some of our stocks now are crazy valuations. So they dwarf, NVIDIA dwarfs the entire Japanese market in the MSCI World Index. I mean, and Spain and France. And so that can definitely happen. But in digital assets, I think it's interesting. You got our president saying, oh, we want to be the crypto capital of the world. And then the Bitcoiners are like, no, we want to be the Bitcoin capital of the world. Okay, fine. But neither one's going to happen, right? We're 20% of global activity. Binance is orders of magnitude bigger than Coinbase. As great as Coinbase is, and as great as Kraken and Gemini and these other exchanges are, Binance runs circles around them on a global basis. So, Tether is this gigantic beast of a company. We're all excited about Circle, right? Circle goes public. Great. Goes up to $40 billion market cap. Fantastic. Excited for Jeremy and the crew. But I heard a stat that Tether makes more every 4 days than Circle will make in a year.
Wow.
So what's that worth? Now they're trying to raise money, I heard, at a $500 billion valuation, which would make it the second largest bank by market cap in the world behind JP Morgan. It's pretty impressive for a company with like 50 employees. So that's a rambling kind of strange answer to your question about how to feel about the all-time high, but it is a high, right? I mean, 126 yesterday is higher than we've ever been. But when you inflation adjust and you look at it relative to how much devaluation has occurred and how much M2 has been created and actually what gold prices have done, we're actually not at a high. Now, I think we'll get there.
Sure.
And then the big question on everybody's mind, and yesterday was interesting, October 6th, we're recording on the 7th. October 6th is interesting in that if you look at the previous two cycles, the 17 cycle and the 21 cycle and now the 25 cycle, if you look at 17 and the 21, the time from cycle peak to low is 364 days in both of them, precisely. And then the time from cycle low to cycle high is 1,064 days. And so 1,064 days from the previous low was yesterday. And what's crazy is there's a guy, and I wish I could remember his name so I could give him credit, but I saw there's this guy that tweeted in 2023, 2 years ago, that the simulation will be repeated and the new high will occur on October 6th, and then we head back down.
That's pretty wild.
Wow. Now, there are a whole bunch of people who are like, no, we're going to the moon by the end of the year. I mean, maybe. So anyway, lots of stuff to talk about. 100% liquidity drives markets, one of my favorite things to tweet. And at the end of the day, this is money illusion, right? Stocks are not at all-time highs, right? I mean, yes, nominally they are, and you can't debate that. But in real terms, meaning if you price them in anything other than, the toilet paper, which is the US dollar, or the yen or the euro, which you're going to race to the bottom to devalue, if you priced it in anything solid, pun intended, like gold, here's the crazy stat. Stocks are down since 1900 priced in gold.
Wow.
Actually not up. Now, you say, but that doesn't count. I'm like, well, it kind of does. And look, most of us don't feel it when things are more expensive. Our rent is higher. The price of a hamburger is higher. You're up in New York, New Jersey. There's this place in downtown New York where, they only take cash and there's a huge line and you get the privilege of paying $30 for a hamburger. And I went once with one of my guys and it was a perfectly fine hamburger, but it wasn't like 20 times better, or 10 times better than the other hamburgers I've had. Sure. In fact, I probably prefer Shake Shack's hamburger over that. But that illusion is what's happening when inflation, right, which robs us of our wealth. And for most of our existence, up until 2009, there was no alternative, right? You lived in the fiat world. Everyone lived. We lived in the fiat world. We earned dollars. We tried to save dollars. But the problem was, in saving dollars, if we didn't put them at risk, like if we just put them in cash, then every day they're stealing a little bit back through this thing called inflation.
In order to determine when altcoins become overpriced in comparison to Bitcoin, Mark Yusko points out a critical but frequently disregarded metric: the overall altcoin market cap, excluding stablecoins, divided by the market cap of Bitcoin. He says that this percentage increased during 2024 and into the middle of 2025, indicating that the altcoin market was experiencing widespread overexuberance. The pattern then started to resemble 2017 nearly exactly, as Mark Yusko had forewarned during the summer. Altcoins peaked in August and September, before plummeting in value in comparison to Bitcoin. He points out that this is not an uncommon occurrence, but rather a part of a recurrent pattern that was observed in both 2017 and 2020. When altcoins fell in value against Bitcoin in October, despite a Bitcoin rally, he claims that the explanation is straightforward. The strength of Bitcoin tends to deplete market liquidity. The pattern itself has always been more important than historical accounts of these reductions. Before the next big shift, Bitcoin's dominance increases, altcoins give up, and consumer mood stabilizes. According to Mark Yusko, that pattern is currently real. He believes that if there is going to be a significant rally in altcoins, it will probably happen between early November and early December, which is also when Bitcoin usually takes its last run upward. However, Mark Yusko cautions that investors hoping for an alt season would be let down once more if Bitcoin does not reach a new all-time high during that time frame.
Well, if you manipulate the price of money, meaning in a free market, people would bid openly on the acceptable return that they would take for safety, right? Someone say, well, I need 6%. Someone else say, well, I need 5.5. I need 5. I need 4.5. And there's a natural market clearing price for risk assets. Well, in a world where a bunch of old white guys, I hate to say it, but a bunch of old white guys decide what the interest rate is, that's not a free market. That's market manipulation. And so in that environment, you get a persistent theft, and I use the word intentionally, of real wealth from the masses to the few. So income and wealth income and wealth ownership, that divide becomes greater and greater and greater. And today it's the highest it's ever been in history. And I think it's interesting. Like I understand why the people in the club, right? They say it's a small club and you ain't in it, right? I understand why the people in the club want that. What I don't really understand is why the rest of us don't pick up the pitchforks, literally, at some point and say, no, no mas. Like, we want open and free markets. We don't want this manipulated market. Inflation, like, who convinced an entire population of people that taking half of my purchasing power every 30 years is a good thing? That makes no sense, right? I mean, I worked hard for that money. And, Jimmy Song, I'm sure you probably even had him on the podcast, but Jimmy in the cowboy hat. And Jimmy made an impression on me. I heard him speak, kind of around the same time we met back in 2018, maybe it was 2017. And he said something very profound that, people get really agitated when I say it, but it's like, he said, look, if you work for a salary, you're a slave. Everybody went, oh, you can't use that word. That's a bad word. It's like, no, think about it. You're a slave, right? You get paid, you put your money in savings, and then they take it back from you if you don't spend it through this stealth tax called inflation. Well, if you work and get paid in Bitcoin, you're no longer a slave because your money actually appreciates. Now, here's the thing. Bitcoin didn't change. One Bitcoin. The Bitcoin we talked about 7 years ago and the Bitcoin today, it's the same thing. It's one Bitcoin. The amount of dollars you need from 16,000 to 126,000, that's different, but it's still the same Bitcoin. So what changed was the money got worse, not Bitcoin getting better. Now, Bitcoin did get better. It's got better hash rate. It's got more decentralization. It actually is better. The network is better. And that's why the value of it increases. But at the end of the day, it's the fiat that went down in value. And what's interesting about saving in Bitcoin versus saving in fiat, if you save in Bitcoin, and again, I'll give Jimmy full credit for this, he says you actually unleash the most powerful force in all of human history, which is human creativity. Because if you don't have to constantly be working and striving to preserve the purchasing power of your money, and your money actually grows, you have some time to think, to create, to maybe start a new business, right? Maybe build a new product. You don't have to just do this slave labor and get paid in this depreciating asset. So again, long answer to an interesting question, but it to me, it all kind of weaves together in that why Bitcoin is such an important innovation, why the construct of money is changing. In it, look, money is a very unique thing. It's an asset that exists in the absence of a liability, right? That's what money is. And that basically the only thing that meets that criteria that is used is gold. Silver meets that criteria, copper, puka shells. There are a lot of things that would meet that, but the only one that's been used for 5,000 years, roughly, because of belief and custom, is gold. But gold, we've talked about this before. Gold suffers from two problems. It's not very portable, meaning it's really heavy and you can't like stuff it in your pocket, a gold bar, and walk through.
Right.
Actually, you can walk through the radar detector. I mean, the metal detector because it's inert. But anyway, so gold isn't very portable and it's not very divisible. Like if I had a bar
Yeah.
and I wanted to break it in half, I'm not strong enough. And even if I could break it in half, I couldn't stuff it in the computer and send it to you. All the Bitcoin in the world fits right here. Now, I don't have any on my phone. Don't SIM swap me. It's not worth it. I keep mine in cold storage. In fact, I'm wearing my Chili Willy socks today for Bitcoin cold storage. The point is that it's also very divisible. I can send you 1/100 millionth of a Bitcoin, right? That's a one Satoshi. I can send you one Satoshi for free, and that's better than the current system. So it is this technological improvement that takes old money, right? 5,000-year money into new age money for the next 5,000 years. But everyone says, but that's not money. Money is dollars and yen and euros. Like, no, those aren't money. Those are currency.
Yeah.
And, JP Morgan said it, right? Gold is money. Everything else is just credit because they're backed by debt. And Saylor, okay, so, well, no, Bitcoin is money. Everything else, okay, great. But it's true, right? Everything else is credit. Everything else is debt. Everything else lives in a world where governments can print it. Now, in the old days, you literally had to printing press it and cut the paper and fold them up and hand them out. Now you just push a button.
Yeah.
And you create more ones and zeros. Well, that's just too easy. There's no proof of work, right? Which is, one of the great innovations of Bitcoin.
Mark Yusko conveys a message that strikes a balance between caution and reality for the future. He is cautioning against complacency rather than announcing the end of cryptocurrency. According to his research, market cycles are becoming shorter, rewards are decreasing, and volatility is still high. In his base scenario, Bitcoin still has an advantage and might test or surpass its prior all-time high by the end of the year. Ethereum is probably going to follow. Sustainability will be the true test, though. Since history indicates that altcoins may crash shortly following, Ethereum's failure to stay above $5,000, indicating the beginning of the next bad market. Nevertheless, Mark Yusko reminds investors that in the past, each crypto winter has opened the door for fresh ideas and sustained opportunities. On the other hand, people who control risk, maintain liquidity, and switch to more robust assets like Bitcoin usually come out stronger. He cites 2 consecutive weekly closures below Bitcoin's 50-week moving average, which is currently close to $12,000, as a crucial warning sign that could indicate the end of the bull run. Mark Yusko's advice is simple: whether you trade altcoins or hold Bitcoin for the long haul, remain vigilant, patient, and defensive. The pivotal moment that divides this cycle's survivors from its victims may occur in the coming weeks.